Mr. Haldane, thanks indeed for joining us today. And I'd like to ask you a question really about the global architecture. Does the world need a global architecture is the question that you're facing. In view of the fact that there have been these problems from 2008 and maybe still continue today. And of course, there is this Asian question as what will be Asia's role? And indeed, whether there will be a role for the renminbi as well.
Those are big questions, and actually a lot has been done already over the course of the last 5 or 6 years or so, particularly on the banking side. So we have new rules globally for how banks are to operate, ensuring they're as safe and sound as we can make them, certainly safer and sounder than was the case pre-crisis. So that's one element, I'd say, of this new architecture, and that will be implemented over the next 5 or 6 years. There's unfinished business across a number of other dimensions. So let me mention one or two of them where we've really unearthed the problem but are yet to fully articulate a solution. And if we could, I think that would form part of a new architecture. So that would include, as Europe's problems have illustrated over the last few years, countries, governments in particular, can find themselves in a situation of excessive indebtedness. How to deal with those problems? Well, in some ways, governments have always been finding themselves with problems of sovereign indebtedness. But internationally, we still don't have a very effective way of countering those problems. We can get the IMF to lend money, we can get regional entities to lend money, but often what we need is a way not of lending more money, but of writing down the existing debts. Some mechanisms for orderly restructuring of sovereign debts. This is an issue that's been discussed on and off for the last 40 or 50 years. But with the European problems having been so acute, that's right back on the agenda. And that'd be one of the elements missing so far from a truly global architecture. A second element would be that we've learned a lot about just how volatile international capital flows can be. In some ways that too is an age-old lesson. The Asian financial crisis was catalysed and made worse by the outpouring of capital that had poured in the preceding decade. There's an acceptance that something other than benign neglect is needed to prevent these very volatile capital flows upsetting the fortunes of, in particular, emerging markets, for whom we've seen the flows being particularly volatile, and especially so in Asia. So if you look over the course of the last 5 or so years, the IMF have really gone through an elegant 180 in their views on the usefulness of measures to manage these capital flows on the way in and on the way out. And there's a much greater acceptance internationally now of the needs for such capital flow management. Those are two issues from a potentially long list where I think further planks are likely to come into place over the next few years to give us something that looks like a proper architecture for this much more globalized and financially integrated world than we've ever seen previously.
And really looking at that architecture, what do you see the role as the renminbi as being particularly more important than it was over the last 5 years? Do you see the dynamics of the renminbi against other currencies beginning to develop much faster, much more broadly?
We've already seen some pretty dramatic developments in the internationalization of the RMB over the last year or so. I can only see those continuing apace. Looking ahead, could we envision a world where we don't have a unipolar reserve currency, the dollar, but perhaps a multipolar world where you have perhaps the dollar, perhaps the euro, and perhaps the RMB sharing that role, I think that's not impossible to envision at all. And if that were to eventuate over some time horizon, I think the case for greater cooperation and coordination between the three reserve currency blocks would be very strong indeed.
Now, looking a little bit sort of outward, but also at a somewhat mid-distance view into 2014 in particular, what do you see in the next year in terms of jurisdictions, in terms of policy, in terms of the sort of way in which currencies and the financial systems of the world operate?
Well, I think the good news from 2013 is that global growth has picked up a touch. We're still not roaring ahead, but nonetheless it's picked up. And perhaps as importantly, it's rebalanced. Looking forward 2014, what are the risks on the horizon about which we ought to have still some concern? Let me mention one or two. I mean, the most obvious, and perhaps the most immediate, is that the world economy is still benefiting from a truly extraordinary, historically unprecedented degree of monetary stimulus. So central bank balance sheets have never been larger. So the central bank in the UK, the Bank of England's balance sheet, has never been larger in relation to the economy in our 319-year history. And the same is true in the Federal Reserve System, where their balance sheet has never been larger relative to GDP in their 100-year history. The same is obviously true of the Bank of Japan and the ECB. So everyone's maxed out. We're in uncharted territory. And what's true of money quantities is true also of interest rates, which are at their lowest level in the UK for 319 years, and ditto in the US, Japan and Europe. So the degree of monetary accommodation has been truly extraordinary and without precedent. And because it's without precedent, we can't know for sure what happens when we begin to take our foot off the accelerator. Now, given that we can't know, the best we can do is to hope for the best, but to plan for the worst. And that means ensuring, for example, that our banking systems, other financial institutions, are prepared for the point at which the stimulus begins to be turned down. So, for example, they have stress tested their balance sheet for rises in interest rates, which at some point, are inevitable. So that we can do by way of preparation, but we can't know for sure that this risk won't cause some ricocheting around the world. So that'd be one risk I'd mention. I mean, a second would be that Europe, in particular some of the more peripheral countries in Europe, is not yet out of the woods. So a number of countries, perhaps as many as half a dozen, are still working through the problems of lack of competitiveness and over-indebtedness accumulated over a 10 to 15 year period. That will take time to work off, to pay down those debts. And as long as those debts remain still high, then those countries remain vulnerable to a reversal of sentiment. So there's a second area there that we ought to watch carefully. And the third I might mention is that look at debt across the globe, the debt position of countries globally. We all know the story ahead of the global financial crisis. Many countries went on a debt binge. Their debt ratios built up very materially. So among advanced economies, in the 10 years prior to the crisis, their debt GDP ratios rose something like 40 percentage points. What's happened in the 5 years since the crisis? Well, interestingly, over that 5-year window, those debts have continued to rise among the non-financial sector. In fact, they've risen more than in the preceding 10 years. They've risen more than 50 percentage points over the last 5 years. What does that tell us? It tells us that this debt overhang problem, that vulnerability, remains. Indeed, if anything, has got greater. And as long as debt is at those levels, there's a question at how well economies can adjust when inevitably at some point in the future interest rates begin to rise again and the costs of servicing those debts goes up. So there's nothing here that should, I hope, keep us awake at night, but nonetheless those are 3 areas we need to watch very carefully, not just in 2014, but I suspect for several years after that too.
Well, some very interesting insights indeed.
Thank you.